Right. Good afternoon, everybody. Can you see me? Or you shouldn't be able to see me. I don't have my camera on, but do you see my screen? Can you hear my voice? Somebody just give me a quick yes, and we will get going. Copy that. Excellent. How's everyone doing today? Boy, what a... Well, I don't know what kind of adult filters Josh does not have on this page, so I'm going to try and keep swearing to a minimum, but what a poopy trading day. What a garbage trading day. I mean, good Lord. Just, little jumps here or there, nothing. I mean, look at this crap, right? I mean, if I put in when the market opened, I'm on Central Time, so market's open at 8:30. Start an hour early, but I'm done an hour early. Look at this garbage. I mean, yeah, sure, general trend up. I mean, if you were to draw a trend line up through this stuff, but I mean, as far as from a day trading point of view, right? When I was watching this, I was doing a live trading session with some of my clients this morning, and other than these two candles, which came really without warning, there was nothing there. Nothing there. So anyway, so a couple of some housekeeping things to get started with today. Hold on, gotta check the message. Okay, we're good to go. So first of all, guys, for those that have attended any of my events, just the events I do on my own page, on my own Discord channel, hold on. Let me get rid of Discord here since that's making noise in the background. Okay. I've said for quite some time, one of the reasons that I enjoy doing these events for Blue Sky is somebody who's been in the education business for about 8 years. I really appreciate any kind of firm that really puts a premium on teaching people really how to trade, right? And as I reached out to various funded trader companies because my clients were asking about them, and Blue Sky was one of the first ones to respond. And I've talked to a couple guys over there, and Josh is sort of my main point of contact. You all know Josh, and I'll tell you two reasons I enjoy doing some work with them is A, they do have a focus on education, and B, they're a smaller company, and I really like that as somebody who's worked. My last job in education was for a very big corporation. I was a part of the education arm of one of the major brokerages out there, and I cannot tell you how long it took to get stuff approved, right? Something as simple as a webinar like this had to go through 5 people and had to be signed off on 3 different levels. All my slides had to be turned in. There's no slides today, don't worry. No death by PowerPoint. Slides had to be gone over by legal and compliance and all of that. Now I can just I can message Josh on Discord and say, hey, Josh, I got an idea to do this thing. What do you say Thursday at 4? He's like, yeah, do it. And that's it. That's literally it. So I can really appreciate that. And that's why we all are in this business, guys, right? We want to trade for a living, and we want to be our own bosses. And if you're like me, you will hopefully will get to that point, and you will not miss it at all. So guys, we're gonna spend a little time. Usually I break down the trading day, right? And what happened, how it went, and again, guys, it's just, at least from my point of view, the style that I trade and what I do. I'll have to go back and look. I actually had a losing day today. I think it was the 14th losing day I think of the year for me, which is pretty small. And that doesn't mean every day is plus multiple thousands or anything like that. But and guys, obviously with any trading amount, we use the old term, what is it, trust but verify, right? All I can do is give you the education and hope that some of it sticks. You're never going to see me on social media posting these huge wins and all of that, and I've got a really nice car. I'm not telling you what it is, and I'm not taking pictures inside of it, because that's not what educators do. That's what influencers do, and that's a very bad word to me. So anyway, yeah, James. There wasn't a lot of in and out action today. And there's days like this, right? But that's okay. We had a big move heading into the markets, and we just kind of grinded upwards from there. Little more momentum. Traders might have had a little more success with it. As me, somebody who's in trades, typically 5 to 7 minutes, trying to catch 40 to 50 points in the NQ, 15 to 20 points in the ES. It just wasn't one of those days. So what I wanted to do, guys, as I've been working with Blue Sky over the course of the last, we've been doing stuff together about 6, 7, 8 months now. I've gotten talking to more and more of you via direct message, via talking in the Discord channel. Some of you have taken courses from me or coaching from me, or I've got a few people in my Funded Traders Accelerator program right now. So, I've worked and talked with a lot of you guys now. So the past really about 8 months is sort of my first exposure to a group of clients who are mostly, and fellow traders who are mostly in Funded Trader programs, right? So it's a big difference in people that are trading their own money. And a whole different set of psychology. It's all the same isms apply, right? The importance of trading psychology, having a plan, executing the plan, all of that kind of stuff. But at the same time, there's still whole new challenges that come with A, trying to get funded, and B, staying funded, right? And that all comes down to, as you grow a little in this business and learn what to look out for and what not to look out for. If you're somebody who is not funded yet within a Funded Trader program, what you do should be building towards trying to get funded, correct? And once you're funded, what you do and what you learn and what education you seek out should be in service of staying funded, right? I've got a whole series of things I'm putting together. This Funded Traders Accelerator program was one of them. I'm working on a couple of, I did a couple of mini courses. Now I'm going to do a couple of micro courses. You can see what I did there, that we're going to talk about next week. But in the meantime, we are going to start doing a little expansion of some of these events, guys. So stay tuned in the Discord channel, and we're going to talk about a lot more going forward. Now, so instead of spending 10 to 15 minutes talking about today, I want to get a little bit into technical indicators. I'm somebody who's typically very simple with my technical indicators. Now, I got a blank chart up here with just volume, and let me show you what my chart normally looks like. I have a Renko up because I have one strategy that involves Renko, but this is my main candlestick chart, right? There's not a lot on here, and we're not going to go through all this today. We'll save that for a future session. But for those that are fairly new, I would even go far as to say brand new to trading. That is one of the things a lot of people in Funded Traders companies have. Their clients of Funded Trader companies have in common. So let me get in the chat, guys. Everyone, tell me how long you've been trading. 6 months, a year, et cetera, et cetera. Everyone, give me just a snapshot of how long you've been in this business. Must be on like a 10-second delay here. On and off okay, that's quite some time, James. Yeah. 4 years, okay. A little longer than I thought. 9 months or 8 months. There we go. That's about what I figured. Okay. All right. So quite a few of you, I would imagine, are fairly new since 2007, 1 year. Okay. Obviously some of you in here are the exception, but I found in talking to a lot of different individuals that it's probably 80 to 90%, maybe even higher, of people involved in these Funded Trader companies are 2 years or less. Probably a lot 1 year or less, or even a few months. Oh, never too late to learn, Michael. That's a great point. Started in stocks. Yeah, so did I. But anyway, it can be very intimidating to jump right in, right? Because what do? You usually seek out some sort of education. Guys, I am a big believer that live trading rooms or watching somebody trade can be very helpful up to a point. At some point, guys, in your journey, the most successful traders are the ones that are taking their own trades. I sat and watched. Unfortunately, he's not around anymore, and I've never asked permission to share his name, so I'm not going to. But I spent about 6 months when I first started in futures about 4 years ago. watching a gentleman trade in a live trading room. And it was helpful, even though my style now is I don't even use the same setups or strategies that he did. And it was very helpful just to watch a professional do it, just to kind of sit. I mean, you know, I've ran live trading rooms in the past, so I know better than to try and just jump into every trade. I'm not a trade copy machine. I'm a trader, which means I'm seeking out my own trades. But it doesn't mean I can't learn from anybody, right? Especially individuals that have been doing this for longer than I have. Okay, but at some point, you know, especially because I will tell you this, guys, the burnout rate of live traders is very high in this business, whether they're successful or not, whether they're legit or not. We don't have time to get into that tonight. But your ultimate goal in trading is to be in control of your own trading, which means making your own trades. Doesn't mean you can't, you know, do a similar style as somebody that you learn from. Okay, but your ultimate goal is to trade on your own. And that starts with beginning to develop your own setups and your own systems. Now, this is going to take some time. I see a gentleman there says they've been developing a strategy for 1 year. That's great. Hopefully, you're starting to see some payoffs of that, right? I have developed a lot of strategies over the years. I trade about 5 particular setups right now. And now, some of them are things I've made from scratch. And some of them, 3 of the 5, are just sort of adaptations of systems and setups that I've learned over the years. Even if you're going to trade somebody's setup out of the box, right? You buy a course, you know, $100. Here's the playbook. Here's the setup, right? You still need to adapt that to your own style. And that begins by looking at technical indicators and starting to get a feel for charting, okay? Does everybody in here use candlesticks, Renko? I know there's point and figure. I know there's TPO charts now. What type of charting does everybody in here use? Candle. Okay. I first got started in candlesticks. I am a Steve Neeson disciple. I'm going to type his name in here. I'm actually putting together a longer form course, guys, kind of based on some of Steve Neeson's principles. Steve Neeson's one of the original practitioners of candlesticks. Him and some colleagues went over to Japan, where the candlesticks originated hundreds of years ago in the rice markets, and learned the candlestick charting, brought it back to the States and to Canada, and integrated it with Western and technical analysis, right? Things like, you know, moving averages and all that good stuff. So, Ninja Renko, I'm assuming that's just Renko charts. Okay. So, to me, candlesticks are king. Now, I showed you I use Renko for one particular strategy that I use. Never use line charts, never use point and figure, anything like that. So, right here, we just have a basic candlestick. Okay. So, the title of the presentation, as you noticed, was three free indicators that we're going to put on this chart, and then we're just going to take a look at it and see what jumps out. Now, I've got 2. The third one I want you guys to pick. Okay, I'm going to have everyone put their favorite basic free indicator in, specifically something you can get off TradingView, because that's what I used, and we're going to combine it with what I just used, the 2 things I'm about to put on this chart, and we'll see what jumps out. Right now, I can tell you today, very little is going to jump out. This is just a chop fest mess, especially after lunch today. Okay, so we're going to take a look at that. The very first thing I'm going to put on this chart is ATR. Okay, so for those of you, let me pull that back up for those of you, you can see it. Average true range. All right, you can just type ATR, it'll come up. This is the first thing I put on just about any chart that I pull up. Okay, so anything that I'm looking at, I'm going to know what the ATR is. Well, Matt, how does the ATR help you trade? Hey, glad you asked. So actually, ATR is more of a macro indicator for me, meaning it's not necessarily something that points to being in a trade. But this does 2 things. ATR does 2 things for me. A, tells me how much movement is in the markets on a 5-minute by 5-minute, hour by hour basis. Oh, first of all, guys, this is obviously you can see NQ chart on the 5 minutes. Okay, now I know some people, I get asked this all the time, what's the lowest you'll go minutes wise? When I'm trading the indexes, meaning the ES and the NQ, which is the vast majority of my trades, I'm only 5 minutes. And I will look that, I don't have it up here, but I have a Thinkorswim chart that I use for 1 hour and 4 hours. And I'll look at that first thing in the morning just to get an idea of some of the macro levels of support and resistance, right? And so I know there's people that trade 1 and 2 minute charts, 3 minutes. I can't do that. I don't know how anybody does that. It becomes, I can't even imagine if we broke this down into a 1 minute chart here, how chaotic it would be. Yeah, I mean, that's a hot mess, right? So also for 5 minutes, it's really nice because I can sit here, I can break down a whole day, and it all fits on my monitor, right? You know, you get one of those older school monitors. You know, when I first started trading, even in 5 minutes was hard to fit a whole day on your chart, right? Now I've got room left over. I've gone to smaller, higher resolution monitors over the years. So what is the average true range? I'm going to spare you the textbook definition, guys, all right? And I'm going to tell you that this definition is very loose the way I'm defining it, okay? I encourage you, Investopedia is one of the best websites out there for newer traders, guys. Anytime you hear a term you don't understand, go to Investopedia, that's sort of the Google for finance, and look it up and learn it, and they usually have links. It's usually a very, very good website. I've yet to find too much egregious stuff on there. It's usually very, very simple, very, very to the point. And what the average true range is going to do, again, one of two things. First, it's going to tell me it's not even how volatile, but how much movement we're getting in the markets moment by moment, hour by hour, et cetera, et cetera. Not only in what the number is, but what the trend is, okay? The number two thing is it's going to help me set the stops and the profit targets for some of my strategies. Not all of them, but some of my strategies. Okay, in fact, my Renko strategy that I work with clients on is specifically built with a 1 ATR stop and a 1.5 ATR half profit target, right? So I always scale out on the upside in trades, which is if you're struggling to have your winners overtake your losers in terms of amount, I highly encourage in scaling out of trades. Makes it a lot easier to let your winners run, right? So ATR, for lack of a better juicier, long-winded explanation, is basically what's our again, it stands for average true range. What's our range candle to candle, right? So looking back over, I believe it looks over, what is it, 13 or 20, depending on the, I don't have the ticker right here, but anyway, it looks back. I think it's 14. It might be 14. And the average of the last range of the last 14 bars, but it takes in some other things into consideration. So right now, we are after hours, of course. The ATR is 14.86. That means on average, in a 5 minute period, we're going to move about 14 points, give or take. Okay. Again, loose definition. This is just on average. So what can this help us do? All right. So let's look back here. Our ATR at 10:30 today, 10:30 Central, was right here at about 26.5. Okay. So what does that tell me? It tells me within 26 points, we'll say 25 points. Within 25 points is just noise, right? So if I take a trade, I need to give it under certain systems. If there's no other support and resistance areas, no other areas I'm looking, in theory, I need to give that trade at least 25 points to breathe, as I like to call it, right? For those of you that have ever tried to scalp the NQ, and if you could do that successfully, you're way better than I am. I've had people tell me, well, I'm trying for 8 points in the NQ, 8 points in the upside, 5 points in the downside. My first statement is good luck. Because, as you know, even on a day like today, where it was a fairly choppy day, you can get buzzed out of a 5 or 8 or even 10 handle trade just about every time, right? Just because of how much the NQ moves moment to moment. Okay, so for one of my particular strategies, again, let's say I saw I had an entry and I did not, so don't hold me. But let's say I had an entry here, right? And I was going long here. Well, one of the first things I'm going to do, if my strategy involves ATR, is I'm going to go down here and look at the ATR. Okay, so the ATR there was, again, we'll call it about 25. So I know right away, what's so I don't necessarily put bracket orders in, okay, but I usually will at least know where my stop is once I enter a trade, right? So I enter a trade, the very first thing I'm going to do is set my stop, and I set a hard stop in the market. I do manually trail it sometimes, but for the purposes of this explanation, just say I put my stop in 25 points below. Actually, let's see if we get in there. What would that be? About 205. So we actually would need to be down here. Okay, so that's the very first thing I'm going to do. And then if this were the strategy that it's 1.5 ATR, then I'm going to go set a half profit target. Again, if we say that's 5 at approximately 40 handles. Well, again, it's loose math there. But let's say, yeah, so about 50, so about up here. And again, guys, I nearly always scale out of winners, so half profit target there, let the rest run. Okay, sometimes it comes back and stops you out, break even on the rest of it. That's okay. All right, but that's how you truly build your account, right? Is by never taking a huge loss and occasionally getting a huge win. And there's too many yo-yo traders when you first start, guys, right? If you pull up your P&L, you see plus 300, minus 200, plus 400, minus 600, plus 300, minus 400, plus 600, minus, you get what I'm saying. What you need to do is again, keep your losses as tight as possible, right? And occasionally let one of those winners run. Because think about that same trader. If they say plus 300, minus 400, plus 600, minus 200, plus 300, minus 300, plus 1200, right? Now all of a sudden that's a whole different trader right there. Okay? Just occasionally having, don't get me wrong, you want your net, you want to be over 50% in your trading. If you're over 50% in your trading and you have a 1.5 to 1 risk reward ratio across the board, that's how you build your account. Okay? It's no different than a baseball player, right? Tony Gwynn was a big singles hitter, but every now and then he got one and it went over the fence. Okay, so it's that I always use that analogy for trading. You want to be like Tony Gwynn. The guy didn't strike out a lot. Okay, always had productive plate appearances. If you're younger than I am, you may not have ever seen him play. I barely saw him play, and I'm 40. But again, this is the style and the strategy that or methodology that leads to getting funded, and more importantly, staying funded. Okay, the goal is not to get funded. The goal is to stay funded and make regular withdrawals, right? That's what we're here to do. So if you want to go out and celebrate when you get your funded account, that's fine, but be ready to work the next day. Okay? So any questions on ATR? So if you're somebody who's having trouble trying to figure out where to set your stops on strategies, that can be a good place to start, right? Because if the ATR is 25 and that goes against you, right? You're 25 points out. The trade was not valid, right? It doesn't mean it was a bad trade just because you lost money on it. If you had a stop and you stuck to it, it's still a good trade. If you had a good trading plan, right? You had a good play. I call them playbooks. I know the terminology gets very screwed up in here, but that can be a good place to start. So if you have, again, you're just figuring this out, you're starting to build out your playbooks and your strategies. Again, you can look at something like ATR. And guys, really quickly, a quick aside, what do I mean when I say playbooks, right? Well, I'm actually building one right now. I'll show you just a glimpse of it for my clients in my Funded Traders Accelerator program. It's one we're kind of building together, right? And this is it, guys, right? This is very basically, what's the name? What's the objective? What do you need on your chart? What's the pattern, right? And give some examples. We're still working on our entry and exit rules, but once you have those, that's a play. Keep track of it. Go label it in your, I made one of my strategies called an RTT trade, okay? So I can say at the end of the day, I made 3 RTT trades, and 2 of the 3 were profitable. Today I made 1, and I was 0 for 1, okay? So these are the things that you have to do to be successful. All right, let's get into my favorite technical indicator now, guys. And on TradingView, there's a lot of different names for this, but this is what I'm trying to do for the VWAP. So this is what I'm looking for, the VWAP, one word. This is a buddy of mine who put all this together. These are all locked. You don't need these. All you need is this one, the VWAP-intraday. So what just popped up on my screen here? First of all, we're going to get rid of ATR just to get it out of the way. Okay. So 5 lines just appeared on my screen. And I love the shading here. It makes it's very nice to look at. Okay. So let's look at these. Right here is VWAP, volume weighted average price. Okay. We'll talk about what this is in just a second. Right here is the +1 standard deviation line. Up here is the +2 standard deviation line. Down here is -1 standard deviation, and there is -2. Okay, so this one indicator is going to put 5 lines on my chart. Okay. I do believe this is available in NinjaTrader as well, and Thinkorswim. I think they have it for TradeStation too, but I can't ever recommend TradeStation for anything. So let's talk about VWAP for just a second. The volume weighted average price. So what this is and why it's important. What this is again, the average price paid per contract over the course of a session. Okay, the average price, that's it. It's weighted by volume, which means if 100 contracts traded up here and 1 contract traded down here, the VWAP's going to be way up here, right? It's going to be very close to that 100 because there's way more volume up there. Okay, so it's not like the average price an order was executed at. It's not again, it's not the mean of the orders. It's the volume weighted average price. So throughout the course of the day, what's the average price somebody paid for a contract in the NQ? You can see it was about $15,250, give or take, at the end of the day, as we get into these after hour sessions, right? Okay. So why is this important? It's important for one very, very key reason. The institutions pay very close attention to it. So who moves the markets, guys? Let me ask you this question. On a day-to-day basis, in the ES, the NQ, what 2 major entities move the markets? Who can get a gold star here? Anybody want to take a stab at any of them, even if we want to know one? No, I'm pretty sure Mike does not move the markets. All of us retail traders, guys, could get together and put our life savings leverage to the hilt into the markets, and we could not move them even a drop in the ocean. Okay, well, okay, hedge fund money maker. You're not wrong. You're not wrong. But there's 2 very big entities. Okay, number 1 is the HFTs, the high frequency traders, the algos. Okay, the algos are the ones providing just so much liquidity out there. I can tell you generally, the algos will probably know where VWAP is, but I bet they don't give a crap. The algos are trying to trade 20, 50, 100 contracts for half a handle or a full handle in the ES, right? They're not trying for 5, 10, 15, 20, 40. They're trying to again sell a quick 100 micros or minis on the ask, buy them on the bid and sell them on the ask, right? That's what they're trying to do. Trying to make a whole bunch of money very, very quickly, right? So they may only make $5,000 a trade, but they're going to do that all day, right? And they're going to be in and out of trades in sometimes less than a second. Okay, we can't compete with them, nor are we really interested in competing with them. As retail traders, we like the algos because they give us liquidity, right? It makes it a lot easier to get into and out of positions. And yeah, VWAP is I've had some good VWAP conversations with some of the blue sky guys. It's a popular indicator for a lot of reasons. Okay, but who really pays attention to the VWAP is the other group that moves the markets, institutions. Yes, hedge funds are a part of this, although there's a lot fewer hedge funds now than there used to be. I'm talking about those 7, 8, 9 groups, funds, whatever you want to call them, that control about 80 to 90% of the liquidity in any market. The institutions, that's exactly right, MTV. the institutions. They are very cognizant of where VWAP is at any given time. And for the simple reason, if you're a trader for one of these huge groups, right, you're not trading your own setups. All you do is you're a grunt. You're following marching orders, right? And you're told at the beginning of the day, we need 500 mini contracts of the ES in our portfolio by the end of the day. Are you just going to go buy those? No. Your job is related on where do you get those? What's the best price? Okay, and VWAP is a huge indicator of that. Okay, if trader A for institution, for BlackRock or whoever, right, the big boys, the big boys, is told to buy 1,000 minis in the market, his average price on those better be below VWAP or very, very close. Because if he paid 10 handles over VWAP, he's probably getting fired by the end of the day. Right, because he literally just cost his company millions upon millions of dollars with the weight that they're trading. Or if somebody was told, hey, I need you to sell these today, and they sell all of them above VWAP, they got a good price, right? They literally put millions of dollars in their clients' pockets or in their funds' pockets. So institutions pay very, very close attention to VWAP and where it is. Okay, so in addition to that, the standard deviation bands, and guys, you don't need me to, Google standard deviation in the curve and all that, but in theory, okay, 98% of the price action should occur between the +2 and the -2 standard deviation lines, right? This can help you really determine strength of move. Now, on a day like today, where not a lot's going on, guys, I can tell you if we had gotten up to the +2 standard deviation band or gotten down to the -2 standard deviation band, I'm playing for a run back towards VWAP 80% of the time. I need a setup, right? I don't just grab it as soon as it touches. I need to see a candlestick setup, or I need to see some other reason to be in, because I have a thesis, and a trade is where a thesis meets a setup, right? That's important for if you're somebody who's just trading because you think something's going to go up, or I'm shorting because I think it's going to go down. You still need a setup. Okay, a trade is where a thesis. And let me type this in here so you can all trade equals thesis plus setup. Okay, so it's again, we don't necessarily want to bias. We don't want to just assume something's going to happen in the market. But on a lower volume day like today, or a day where things just aren't moving, my thesis is always going to be to play off of the standard deviation bands, right? So if we had gone up here, let's say we had drifted up here, volume didn't increase, my book map's not showing me any big orders sitting up here that could get filled, and then I see, like, let's say a gravestone doji, right? Something like this. And then the next candle starting to head down. Maybe we test this here again, right? I'm going to play that probably 10 times out of 10 for a move back towards, I don't even need to get down to VWAP, just the +1 standard dev band, or half off here, half off down there, right? And there's a whole range of setups, guys, involving these bands. I teach something called the VWAP tap, right? Like here. Pretty nice setup there. Tap the VWAP, ran up. Okay, there's strategies that involve bounces off the standard dev bands, right? Some practitioners of VWAP will tell you should never be trading around these +2 and -2 standard deviation bands. I don't necessarily buy that. Now, don't get me wrong. Let's say on an FOMC day, or a day where we get an inflation number. I think we got, CPI coming next week or something like that. Yeah, the standard dev bands do not give a crap about your price action at that point. But on a day like today, if price action had crept over towards the +2 standard deviation bands, I can promise you the HFTs, the high frequency traders, the algos, are going to come in at this point. And if you have a heat map, like Bookmap or some of the other ones that are out there, that you can actually see that happen in real time. Now, is it 100% strategy? It's going to work every time? No, of course not, right? But something like that is a very good place to start building out your playbooks and building out your strategies, Okay, I have in the past. I could literally do 3 hours on VWAP and strategies involving it, things to look out for, and all of that. But if you're not familiar with it and it interests you, throw it on your chart and just watch it for a few days. And the beautiful thing about candlesticks, guys, unlike Renko, is you can see all the prices that were traded. Renko, sometimes depending on the time frame you have it set on, it can be doing one of these and bounce, right? But for all you know, it could have gone further down here, right? Because you don't necessarily show all the buying and selling tails on Renko. That's one of Renko's disadvantages, okay? Whereas with candlesticks, you can again, Steve Neeson teaches how important these wicks are. The wicks, the shadows, whatever, tails, whatever you want to call it, like this big selling tail here, right? Those things are very, very important. Okay, any questions on VWAP? And does VWAP ever change its price position if you change the chart from 1 minute to 1 hour, 1 day? No, it absolutely does not. I can show you. So VWAP is it's not a constant because it's changing, obviously, but it's going to be the same wherever we put it, right? Because all it is, guys, it's really not a time-dependent thing. It just takes, in any given session, which the VWAP should reset here pretty quickly. VWAP is a good one. Well, standard deviation bands are based on statistics, right? So on some days, in fact, we like days like this, where let's say it's we're gonna go in our heads right now. It's 9:30, right? It's about things are about to kick off. VWAP will sometimes on high volume days will fluctuate a lot in the first 30 minutes of the market, right? Because that's where all the volume is coming in. But after about 20 or 30 minutes, we actually want to see these standard deviation bands open up a little bit, right? Because that's going to give us a little bigger range. All right, they're going to naturally tighten when the market's open just a little bit because of the heavy volume, right? But after an hour of the market, we don't really want to see these tightening up, right? Because that means our ranges are getting a little tighter and we don't have as much room, especially if the ATR, which I took off, starts declining, right? And we saw that today. That started declining. These things got parallel. That makes it really tough, right? So yeah, the standard deviation, these values will stay pretty similar depending on again, for some reason you pull VWAP up on different platforms, it can vary a little bit. Sometimes just a point or two. I use Edge Pro X as my platform where I place all my personal trades. Their VWAP is a mess. I don't know how they even calculate it. I don't even use it. Hopefully they fix it. It's like it can be off like 10 points. So I don't know if they don't include pre-market. I don't know. I don't know what they do with that. VWAP is also big with stock traders, guys. Because stock institutions, we talk about, institutions wanting futures. If institutions want to build up, let's say Buffett's group wants to acquire 10,000 shares of Apple, and they give that order to one of their traders and tell them they have 2 days to fill it, they better get most, if not every single one of those shares below VWAP. There's also anchored VWAP that can be multiple days. That's a whole different thing, guys. Some people they swear by anchored VWAP, like in stocks, maybe anchored to the last day of earnings or all this stuff. I'm not huge on that personally, and I don't think it's as applicable in index futures, which is what most of us, including myself, trade. But I don't want to sit here and rule anything out. And again, guys, the one of the most important sorry, I saw the comment there. I completely lost track of there's a million ways to make money in the markets, guys. They're all just kind of hard to find, right? If you go in the Blue Sky Discord server, guys, under the tips, I put a quote in there from I don't have it up because it was dinging too much, from Mark Douglas from the Disciplined Trader. And it's very, very applicable to what we're talking about. how important psychology is and all of that stuff. Okay, so guys, I told you I was going to let you guys pick an indicator to put up here. So somebody tell me, what is your favorite free indicator? Something fairly basic. I mean, I don't want to get into anybody's strategy or anybody's personal indicators or anything like that. What do you guys like? You like MACD, RSI, moving averages, things like that, or just something that's built into TradingView? Honestly, guys, I'm not an affiliate or anything for TradingView. I'm not about to drop you an affiliate link or anything like that. I highly recommend them. They're one of the most versatile chart platforms, and obviously with any sort of Trade of 8 plan, like with Blue Sky. I mean, you guys can correct me if I'm wrong on that, but you can plug a Trade of 8 plan right into TradingView, correct? Pivots. Okay, what specific pivots? Pivot point standard. I don't know any of these. Are we talking pivot points high low, pivot point standard? If you have TradingView, give me the exact name of it and we'll plug it in. Otherwise, if nobody has any, I'll plug the top one in if nobody has any. So we had 3 of you say pivots. All right, well, let's just throw the pivot point standard up there then. I don't have the slightest effing clue what those things are. Try the high-low one. Got it. Okay, so it's a little more interesting. So these are areas where price action has high-low with 5-5 setting. Got it. All of these 5s? Okay, there we go. Okay, so this gives us a couple of different little things pulled out, right? Yeah, or 10 is fine. Yeah, I mean, guys, any indicator, guys, if you're brand new to trading, if you're within your first 2 or 3 months, just play with some indicators, right? Yeah. Just throw some moving averages. Start with a very basic, like 3-8 exponential moving average crossovers. I had one of my mentors ran her whole retirement portfolio, like her whole IRA or whatever the Canadian equivalent is, on 3-8 moving averages in leveraged ETFs. That was like 20% of her portfolio. I'll see if I can dig up that strategy. She wrote it down. It's basic. I mean, it's not like it's proprietary or anything. All right, guys, so this can give us little points where the markets turn, right, where they pivot. I would guess that these are probably put up pretty after the fact, right? But yeah, this is interesting. I'll tell you another one that I was playing around with the other day, the Globex highs and lows. I have a buddy who trades these. Well, that's a lot going on there. I don't think I want that one. What about... Okay, well, never mind. I was playing around, but those are like the sessions. Yeah, so like the highs and the lows of the overnight sessions, right? So that's something to play around with. In fact, I have a buddy I learned from that has some like Globex bull bear trap setups, right? Because a lot of traders look at the Globex levels. And so it's basically like mean reversion off those levels. But again, these are all, I probably have 30 strategies, guys, that people have handed me over the years that I've either, taken, you guys, you take free webinars like this one, right? Or so I'll look at them. If they don't interest me, I don't throw them out. I put them in a drawer. Maybe I play with them a year from now or 2 years from now. It's how I've ended up with the strategies that I teach. You should always be developing new strategies, guys, right? Yeah, 24-hour session. It's, I believe, the default. Again, it's whatever the default is off of this. Yeah, so just the daily time frame. But it is going to, so it'll start here when the markets kind of reopen here in the next, half hour, 45. I don't trade the overnight session, so I don't worry too much about that. Okay, I'll play around with that. So, guys, you see how 3 free indicators we've built a chart, right? So something like this, like just for example, okay? And I'm not saying to trade this, I'm just saying, so for example, we have a pivot point up here right at the +1 standard deviation band, right? We got another one here, okay? So if I see this, right, if I just sit down at my computer and I see what's going on here, I'm thinking, boy, I'd really like to see a break of this level. Now it faked us out, right? If we had just said on a break of this level we're getting in, we'd be stopped out. Well, it depends on what a stop loss is, right? But you can see just looking at an area where maybe there's consecutive pivot points, right? Or again, everyone wants to, hey, what's the trend? Well, the trend is just a series. An uptrend is nothing more than a series of higher highs, higher lows. The downtrend is the same thing, or is the opposite, lower lows and lower highs. And if we're bouncing around a little bit, we really don't have a trend. I know generally throughout the day, you can say we were in an uptrend, but pretty much after about, really even like 11 o'clock, we basically weren't trending at all, right? Yeah, look above and fail. Yeah. Guys, this is the starting point of every strategy, right? That's not like, machine learned or, AI tested and that kind of stuff. This is how you do it. You look at charts, you say, I wonder. You can, for those that are talented enough programming to back test. I've done a lot of back testing just because I used to have a buddy at TradeStation that could do a lot of that stuff for me, a lot quicker and a lot more efficiently than I could. But a lot of this is what I call just forward testing. At the end of the day, go back and look, right? And just, hey, how many times, okay, this pattern played out 3 times. It would have been a good trade 2 of the 3, or a profitable trade 2 of the 3. Not every good trade is profitable. Not every bad trade loses you money. Just learn that. All right, guys, I got a few extra minutes here. So I would like to open it up to any and all questions that you may have. Any trading related questions? Did everybody do all right today? I mean, again, it's probably a tough day to make a ton of money, but nobody got their butt beat today, did you? Hopefully not. I will say this, guys, there's nothing more important. Gosh. If I had somebody walk up to me tomorrow and say, I want to be a futures trader, a day trader, what's the most important thing? The most important thing is screen time, okay? All the stuff I talk about, developing playbooks, testing, journaling, all of that is vital, super important, but nothing beats screen time, okay? So I did a live trading session with some of my clients this morning. We had no trades for the first hour. We took 1 trade, had a small loss. Okay, I think it was about $200. The whole time we're there, and as soon as the trade was done, I'm sitting there looking at this going, this is not, unless something fundamentally changes, this is not going to be a great day to trade. And sure enough, for the most part, it was not. Okay. I know, and sure, maybe there's some people out there that can go through, 20, 30 minis and all of that. But if you're working with realistic position sizes and you're not paper trading, today was pretty tough. So I know somebody may say, well, I did this because I'm trading. Well, okay, what's your position size? Right, I trade about 2 to 3 minis in my personal account when I'm doing demo stuff for with my clients working on eval accounts. I'm doing 10 or 5 to 10 micros, and we'll go from there. So, all right. Any other questions? Do a deep dive. You know what? That's a possibility. Let me get into my materials on that. I have a couple of setups that are based on VWAP, some very basic stuff, but we can potentially get into that. Yeah, absolutely. Also, guys, make sure, like I said, if you're watching somebody trade, nothing wrong with making some money with them, but do not plan on, again, the number of guys that run futures trading rooms, and this is nothing against them. I've done this before, and I know how difficult it can be, that stick around in this game more than a year or two is very, very small. There are the number of rooms that are open, that were open when I started in this business 10 years ago, there's next to none of them. So true, and don't get me wrong, there's some great traders out there that you can learn from. I'd like, obviously I'm a little biased. I'd like to think I'm one of them. But the ultimate trading success is not following somebody else's trades. The ultimate trading success is trading your own trades. Now, that doesn't mean you can't learn one of my strategies or Mike's strategies or somebody else and say, okay, I'm going to adapt this for me. That's great. Nothing wrong with that. But the ultimate freedom in trading is when you don't have to have somebody else's voice in your ear. You can make your trades. Again, nothing wrong with learning from or watching, right? But, the best advice I have, if you find a trader that you watch, and sure, I do some live trading stuff. Obviously, Mike's in here every day. Your first day with anybody, your hand should be folded and not on your mouse. Or you should have a pen in your hand taking notes. Okay. Any questions? I'll take one more question, just if anybody has it. Other than that, again, we're going to be doing some more of these sessions going forward. I'm working with Josh on the schedule right now, so stay tuned on that. Maybe we'll put together a schedule. I'll get with him maybe tomorrow. We'll put together a schedule for the rest of the month so you guys know when all these events are. Because this was my fault, guys. I sprung this on Josh last minute to do one of these. But we've got a couple of things that we're working on that I think will be helpful for you guys from an education point of view. It's always helpful, guys. Josh is in there, giving you guys some tips and tricks. Mike's there in there live trading. Bringing me on is a slightly different voice, because you may have to hear the same thing from 3 different people before it sticks, guys, right? And I would be willing to bet if me, Mike, and Josh were all in the same room talking, we probably agree on a lot of the fundamentals of stuff that we do, right? Yeah, that's great. That's great. Yeah, for a 25K account, you do 100, $200 a day, or even, like you said, 70 to 75 a day. That if you can do, again, keep your losers to under $100, try to get your winners in the 150 to 200, you get there. You will get there. So just don't let. I'm actually, guys, I'm putting together a very short course that I will be releasing next week. It's going to be very, very cost conscious. It will not be expensive at all. On the 25 rules of day trading, according to Douglas Zielinski. As an old trader, put these together. I've updated them a little bit because he talks about lots and bond trading and all that in there, and I don't personally trade that. But I'm going to sit down. I'm actually going to record it tomorrow. And so I'll have that next week if you guys are interested in that. But it's some great stuff. He talks a lot about position sizing and the fact that, and this is something, quite frankly, a lot of you need to hear, you have to earn the right to trade big size, right? Like I consider 2 to 3 micros or minis is what I trade personally. That's pretty good sized. I know it's not institution size, right? And I know there's, honestly, guys, I watched, somebody sent me a link to a YouTube trader the other day. And this guy's trading like 25, 30 minis. I wanted to call BS on that so bad, so bad. Very few personal brokerage accounts, and that also goes with my rule. If I don't see it, it doesn't exist, right? This guy was saying he made, I don't remember what it was. It doesn't matter if it was $5,000 or $500,000, right? If I don't see it on the screen, it didn't happen. Yeah, so that's a great question, James, and we'll wrap it up with this one because I think it's I think this is a good question. Any thoughts on exploring other markets like CL or GC when the ES is garbage like today? Yeah, so I've always had, I don't have them on this one, but on my trading computer upstairs, I always have CL and GC up. I don't trade them near as much as I used to. Prior to this year, if you go back to the last 3 years, and guys, I can give you these stats because I keep a very detailed trade journal. You go to the last 3 years, so calendar 2020, 2021, and 2022. About 70% of my futures trades were in the ES. Okay, about 20 were in the NQ, and about 10. Well, would that be 8 to 10% were in. I dabbled a little bit in the grains, but in gold and oil, and I just kind of got away from them. This year, it's been tech running the show. Right, we've had whole months where the ES this year, I think just shy of 80% of my futures trades have been in the NQ. Okay, because that's where the movement's been. And one strategy that I started using this year, that Renko-based strategy, I only use in the NQ. So that's a big reason why. Okay, guys. So again, for those of you that made this on the short notice, I really appreciate it. I will work with Josh, and hopefully by tomorrow or maybe Monday morning, we can get the schedule out. We're going to be doing a lot of these events in the next couple weeks, and then I go on vacation for a little while. And when I get back, we've got a couple things in the works. Got to finalize them and talk to you guys about that and kind of. But again, guys, if you have any ideas for whether they're topics or just some type of education that you think would help, feel free to reach out to me directly on Discord. Trader Matt is my name. I'm under the trading coaches section there on the right hand side of your Discord. But we've got, I've done a lot of different things in the past, and Josh and I have been having ongoing conversations about some ideas of things that will hopefully create a little more programming for you guys, right? You've got a live trader every day. Now it's time to be adding some of that other stuff, right? When the markets close, things slow down a little bit, and we can have conversations like this. Okay, but for those of you that show up to an event like this on short notice, you're the ones I bet on. I'm preaching to the choir a little bit on this, right? Because you're taking extra time. A lot of people, whether they're successful or not, shut down their computers at 4 o'clock and walk away. Those aren't the people that are going to have the long-term success, right? If they're newer traders, right? There's some days I love to shut down my computer at 4 o'clock and, go sit on the front porch with a Manhattan, right? But, I enjoy doing these. I enjoy helping people, and hopefully we can, if my voice isn't the right one for you, well, again, we've got, you've got Josh, you've got Mike. Maybe their voice isn't right for you. Well, you got me. So we're building some stuff out. Again, Blue Sky is very serious about education, guys, which is one of the reasons I enjoy steering business their way, because honest to God, they give a crap. They really do. I can tell you, Josh and I have had many conversations where it's just like, well, how do we help these people get where not only you want to go, but where they want you to go, right? When you're in a live account and making some money, hey, everybody's happy, right? All right. I appreciate your time today, guys. Thank you for being here. Stay tuned for the full schedule for the rest of the month. We'll get that to you as soon as possible, and we will go from there. Everyone have a great rest of your day, and